Every Monday morning at 7:15 a.m. Pacific Time, in my live streams, I am fully revealing my proprietary safe wheel strategy for free. Using my 28 years experience, I've developed the safe wheel strategy to cancel out the risks associated with the normal wheel strategy. I also designed the system to only need my attention once a week on Mondays and on rare occasions Fridays. And this is what I call a level 5 strategy. Now what you see on the screen is the trader matrix. I developed this to make it easy to distinguish between trading levels. After taking over 30 online stock and options courses, I've found that I'm the only level 5 trader that is not using portfolio margin. Portfolio margin is used for large accounts over $100,000. Now after 28 years, I've only found one edge in trading, and that is selling option premium. Level 5 trade systems are the only way to sell option premium efficiently and safely. For a better explanation of the 5 trading levels, see the link in the description for the video called The 5 Stages of a Trader. Okay, let's get started this morning. So I need to do a sound check, so please let me know in the comments if you can hear me. Hear me. Okay, good. All right, thanks. All right, let's get going here. First thing I always want you guys to do is post any questions that you might have. That way I won't miss your questions towards the end of the live stream. Okay, let's get into something interesting. The earnings edge. What kind of results am I getting? Well, we traded FDX last week and I lost 2x, $522, and this account is actually down on the year. So I think that's very interesting. Basically, my record is 14 wins, 5 losses, and 3 ties, and the account is down over 6%, and it's been about 6 months. So what I'm going to do is I'm going to make a change because I'm not willing to, if I have a product that's underperforming, I'm not going to continue with that product. I'm going to either change it or I'm going to eliminate it. I'm just not going to have something out there that's not making money. So basically, this thing is performing below my expectations, but there's kind of a reason behind that. So I have 8 filters that I use to pick the stock of the week. And I have been, because of the fact that I'm trying to pick one stock every week, I want to keep the occurrences up. Sometimes I've been using, I've been accepting only 6 or 7 of those filters for it to pass through 6 or 7 of those filters, not all 8. And I've noticed that when I don't use all 8 filters, those particular trades do not do as well. In fact, those are the ones that have given me the big losses. And so the problem with that is I won't get the amount of occurrences if I only filter, make sure that everything passes through all 8 filters. But if I lower my occurrences, I can get better results, because when they do pass through all the filters, then they win 3 out of 4. So that's what I'm going to do. So I'm going to change this up a little bit. I'm going to make sure that anything that I pick is going to pass through all 8 filters, and it's going to lower the amount of occurrences. And if I lower the amount of occurrences, that makes this service less money, because it costs a certain amount of money and you need to make a certain amount to overcome your costs. So what I'm going to do is I'm going to lower the price to only $149 a month. So it was $259. I'm going to lower it to $149 because there's going to be less occurrences to make it more economical. And also, I believe that I'm going to see those 3 out of 4 wins, because I'm going to be a lot more picky. But there's not going to be a trade every week. There's only going to be a trade when those 8 filters are passed through. So it's a lower cost and there's going to be less occurrences. And so that's what's going on with the earnings edge. And if I continue to use these 8 filters and this thing continues to lose money, I'm going to shut it down. I'm not going to keep something out there that's not making money. So for example, if something that I have total confidence in that I know is going to make money is my Premier level 5. So let's take a look at that. So you can see here's the result here of FDX down $522. Here's the result of the earnings edge accounts where it's down 6% on the year. Okay, let's talk about the Premier level 5. Okay, the Premier level 5, I started this account with $30,000 on April 8th. Since then, the market is down 16%. So I'm trading on the ES. So I'm trading the market. I'm trading options on the market. And the market's down 16%. And I'm up around 2 to 2.5% with this trade system with very minimal drawdowns. I've taken 7 trades with the Premier level 5. I've got 3 wins, 0 losses, and 2 ties. And I have 2 open positions currently. And those positions are a little bit, when you combine both of them, they're a little bit up. So all the positions that I put on have either made money or broke even. And with this, during the back test, I had 80% win rate, which is no big deal because one of the things that I'm going to put out a video on this. If you have an 80% win rate, that doesn't mean anything because the 20% that you lose on, the 2 trades out of 10 that you lose on could take your account down. You could lose a lot more than you make just because you're winning 80% of the time. With this system, the 2%, the 2 trades out of 10, they're only losing half of what one of my trades would make. So for example, I'll be doing 8 trades and they make $100 each. Well, I'll have 2 trades that are losers and they'll lose around $50 each. Okay, so not only is the win rate higher, but the amount of money you make per trade on per win is higher than the amount that you would lose. So this is a great system. So this is the one I really recommend. And again, we're up about 2.5%. Okay, let's get into the safe wheel. Now, since I started the safe wheel, that's this account here, I've been trading Macy's the whole time. Macy's has been a good stock, and since I've been starting trading the safe wheel, the market is down over 21%, and this account is up over 22%. So vastly outperforming the market by like 40%. So this is a good system. This is a solid system. Okay, so let's get into what we're going to do next with the wheel. So we have our put hedge, right? We have our 3 hedges. That's really what makes the difference with this safe wheel versus the normal wheel, because with these 3 put hedges, now we're just going to do pretty much a version of the normal wheel. And that version is to sell in the nearest term, the options that are expiring this week. These are the ones that we sell. This is where we collect our premium. So where we are is I got assigned, Macy's went below $20. So I sold the $20 put last week, and Macy's went below $20 on the close on Friday. And so I was assigned 100 shares at $20. So now I own 100 shares at $20. So what's next with the wheel? Well, if you own 100 shares, the next thing to do is to sell, create a covered call. So I'm going to sell a call. And then also, because I have this hedge, I'm going to protect this hedge with a long call, a little $5 call. So that's what I'm going to do now. So let's do this. So again, I'm going to go into the ones that expire on Friday, closest term. And I want to get, okay, so we're trading around $20, so I want to get at least 20 cents, but I want to be out of the money. So I could go to this 21 strike if I wanted to, but I'm going to take a little more premium in. I'm going to go to the 20.50. That way, if I get called away, I'll make another 50 cents, but also I'm going to make around, $30 or $35, something like that. So I'm going to sell this call right here. So I'll start at 36. Let's see here, working. And then I'll go to 35. And I go to $34. That's the mid price. Okay, so it looks like we filled at 34. So we collected about $34. Now we need to protect this hedge. So in order to protect the hedge, I'm going to buy something. I'm going to get a long here. I'm going to go to the 22. See, it's around $5 or $6. I'll try to pick it up for $5. And I'm just trading one because that's my sizing. And also, the question might come up, Macy's is going to be under $20. Do I get out? No, I'm not going to get out of this position until I get taken out. So let's say that, let me place this order here. Okay, I'll pay $6. I won't pay $7. All right, so now we have our position on for the week. And on Friday, I'm going to come in and I'm going to see if Macy's at the end of the week is over $22. Wait, over, what did I do just now? I think it was a 22 strike. Yeah, here it is. Okay, over 22. If it's over 22, I'm going to sell this call and take the money. So I just, I have my alarm set for 15 minutes before the market closes on Friday. Go in, take a look. Macy's is over 22. I sell this call. Okay, so again, going back to, Macy's could be below $20. And I know that I'm not going to trade stocks under $20, but I'm going to wait for this to play out. Like, I'm still in this cycle, right? And if I get out of this cycle and Macy's at that point when I get out is under 20, I'll pick a different stock. Okay, now one thing I do have, I haven't gone through every circumstance possible while trading this live. There's things that could happen that have not happened. And if you're interested in knowing everything that could happen, I have a flow chart available and I have it for sale right now for a pretty low price. I've been thinking about raising the price for a while, but I've kept it low for $59. And you can see every scenario, every possible scenario that could come up with this particular trade system. Because there's no way I'm going to go through every trade system because every scenario is not going to occur while I'm trading it live. So check out that, and there's a link in the description. Okay, so again, we talk about, I just want to kind of recap on the returns. The earnings edge is down 6.2%. Premier level 5 is up over 2.5%, even with the market down 16 during the time frame. And the safe wheel is up 22% with the market down 21%. All right, let me get into the questions here. Hello from Mauritius. I'm not sure where that is. Never really heard of that. I don't think it's in the United States. Okay, let's go here. Walter, under what circumstance do you roll the put hedge up or down or out? When the put hedge is at 70% or lower than the price of the stock. So my put hedge right now is 17 and the stock is trading at 20. So with the stock trading at $20, I'll multiply that times 0.7. So if the put hedge was at 14, I would roll it up. It would be too low. And I'd roll it up to 80% of what the stock price is. What filters do I use? Okay, I think you're referring to the earnings edge, and that's proprietary. Okay, Walter, that's a good point. Even Tasty Trade keeps talking about probability of profit, which is irrelevant, which is correct. It's not relevant. It's profit expectation value. Absolutely correct. Okay. Will you consider buying straddles in a low VIX environment as a decent strategy? No, buying options is a low probability trade, and especially if you're buying straddles, you're buying at the money. So those are the highest. Those are the ones with the lowest probability because they have the most extrinsic premium. And so the price, the movement, the expected move is already priced in, and then some. So when you buy a straddle, you're buying much more premium than what you're expected to get than the expected move. Since the wheel is overperforming, maybe increase the price of the template by $50 to make up for the price lowering on the earnings edge. Good idea. I like that, Will. Hey, why not stop trading Macy's if it drops below $20? I know it's a rule for the system, but was wondering if you could provide more detail. Okay, so I think I went over that, but when I get out of the cycle, that's when I'll look at the price. I'm currently in a cycle, so I'm not considering the price is under 20 or over 40. I'm not considering that. When I get out of the cycle and start a new cycle, that's when I look at the price. Will, can you make the positions bigger on one of the earnings edge occurrences to make it for the less occurrences? No, I won't do that because I think the 6% target is reasonable, and the amount of money that I have in the account, I'm seeing a lot of volatility. Even when I was up a lot of money, there was a lot of volatility in the account. There's enough volatility. I don't need to add to that. Okay, and so the place is Mauritius, and it's in the Indian Ocean near South Africa. Cool. Okay, Walter, tell them to click the like button. You guys click the like button. Thanks, Walter. I always kind of forget to promote. I'm not really thinking about promoting a lot. I'm thinking about how am I going to make money trading. So I don't know. Maybe that's one of the differences between me and a lot of instructors. All right. Are there any more questions? Let's see here. Okay, I don't see any more questions. So remember, if the P&L is not real, what else are they trying to conceal?